It's about that time of day again here, boys and girls. Welcome back, welcome back. Newsletter time, JJ here. Tuesday evening, January 20th, 2015. Welcome back to our nightly newsletter. Hope you guys had a great Martin Luther King Jr. long holiday weekend. It never lasts that long, never long enough. Back here in the action again in our live trade room here this morning. Had a fantastic Tuesday that felt like a Monday. Before we jump into our trades and before we talk about our strategies for tomorrow, I want to remind you guys to watch this newsletter on our trading blog at sidewaysmarkets.com. If you're watching the video over on our YouTube page right now, make sure you guys click the link below the video on our YouTube page if you're watching it off of the trading blog right now. 3 reasons why you got to be watching this video on our trading blog. First reason, you can download all of my charts for this evening. Everything I'm going to show you today on the video, you can download all of those charts by following that link right below the video here this evening. Second thing, upper left-hand corner, I have a special invitation to anyone who is not a member at School of Trade but would like to see what it feels like to be a member in our trade room. If you're curious or would like to test drive our live trade room before registering as a brand new member, make sure you grab your free pass in the upper left-hand corner. Get a special invite to come out and join our trade room as a guest. And of course, last but not least, third thing here this evening, want to remind you guys we have a special mailing list strictly for our nightly newsletter. If you'd like to be sent an email every evening around 8 p.m. Eastern Time when I send out my newsletter, just go ahead and give me your name and your email address, and I'm going to send you a verification email to make sure that I got the right information. So make sure you check your email, right? So when you register for the free pass or you join our nightly newsletter mailing list, make sure you check your email. Check your spam, check your junk folder. I'm going to send you a verification email to make sure that I've got the right address. Alrighty? 20th day of the first month of 2015, a Tuesday evening. Volatility continues, and let's jump right in here, guys, on a Tuesday evening, getting ready for Wednesday's trading opportunities, starting with the mighty mini Russell. Okay, trading the March 2015 contract here on the Russell, and of course, as you can read up top here, Russell trading in the middle of the range with a bearish tone at this time. We're looking for selling opportunities at the resistance lines above, and we're going to use some specific areas here below for profit targets. We can see those profit targets listed down here at 29.1 and 1107.4. So ultimately, looking at this Russell right now, we can see a trend line drawn off from the lows. We've got higher lows. We've got lower highs. And that gives me what we consider a consolidating range. Now, consolidation is really, really easy. Buy the lows, sell the highs, stay away from the middle. This consolidation, though, has just a little hint to the bearish side. So right now, we're going to err on the side of caution on this Russell, and we're going to keep selling here, focus on the sell side, and we know that we're going to be getting the best selling opportunities on this Russell at these overhead levels. I'm going to swing high here at 77.7, swing high 86.4, trigger zone 86.6. I've got a swing at 99 even, call that 1200. I've got a trigger zone overhead at 1202.9. So if we go higher, looking for selling opportunities off of these highs right now on the Russell. So use those levels overhead and look for selling opportunities at those levels. And again, don't forget, come out and join me tomorrow morning in our live trade room, and I'll walk you through how we're going to trade all these levels in real time. So Russell trading right in the middle of that range right now. Stay patient, wait for price to go up, and I'll sell it at these resistance areas and use basically the green lines below me I'll use as profit targets. Nice and easy. We know what our direction looks like now in the Russell. Direction is pretty simple, looking for those selling opportunities here on the Russell. Now, here's an example. We move from the 32 to the 16, and we can kind of see what's going on here, right? We can see we're headed lower. We make a run for the highs. Clearly some resistance here, preventing those buyers from taking control. A little bit of a double top here. Buyers tried twice, and then obviously gave up. New lower low, lower highs. This is screaming at us here, although we may not be blatantly bearish on this chart. Definitely very obvious. These buyers, they tried and failed earlier this week, late last week, right? And now, of course, as of this morning, we have that lower low. That lower low now, combined with that lower high, gives me my directional bias. And then all I have to worry about now is just finding entry patterns at 71.4, 74.1, 76.3, 1178.5. So my direction right now is bearish on the Russell. I'm looking for selling opportunities at resistance levels overhead. And then all the green lines below, those are support levels, we'll use these for profit targets. 56.6, 49.1, 47.9, 39.4, and 35 even. Right? So as you can see here, plenty of opportunities there, but we don't have that many options to the upside to get short. So we'll be watching closely that 71.4, 74.1, 78.5. Be watching those levels very closely here in the overnight session, as well as coming into tomorrow morning. And remember, we're not going to blindly just sell. We're going to wait for price to go up, test these areas, and then we'll look for a reversal pattern first, right? That'd be the first step we look for, a reversal pattern. Second step is if we miss the reversal pattern, or if we don't get the reversal pattern, then we can simply trade off that high once we start pushing lower. The key right now, though, is we got to get up towards those highs so we can get ourselves into a higher percentage area to sell short. Okay, looking good on that Russell. Downtrend on the Russell, looking to sell short. Last but not least, let's wrap up on the Russell here with some price action. Now, price action charts, very few indicators. All we're doing is reading, well, the price action, right? We're reading the candlesticks. We can see here lower highs in price, lower lows in price, right? Drew out that channel. We haven't quite confirmed the low of that channel yet, but that's about as good as we're going to get it right now. So at the very worst case scenario, it's just an overhead trend line. Best case scenario, it's a bearish trend channel, right? And again, because we only have one low here, it's very difficult for me to be too confident that this is in fact a channel, but we usually are pretty dead on with that stuff. So I would assume here for this video this evening, we'll definitely have that being a bearish channel. So we know we're in a downtrend right now in the Russell. Let's keep looking to sell at resistance levels overhead. And from what I can see right now, we have this bit of a short-term bullish move higher here, right? We've broken free. I would definitely expect these buyers in the Russell to try to push this price up, retest that high, and then we'll be looking for that selling opportunity here up at that 71.7, 76.6, 82.7. Right? So make sure we keep an eye on this Russell at resistance areas overhead. And again, as I said earlier, we're not just going to be selling that 71.7. We're going to wait for price to go up, look for the original reversal pattern. If we don't get the reversal out of it, then we have the wave patterns, right? We've got continuation patterns all the way back down. So looking at selling opportunities at the three levels overhead. Target opportunities, 61.8. And of course, any of these levels here, right, that you see below, get a measured move setting up right here down to that 49.2. So stick to the sell side here right now. Do not be surprised, though, overnight if we happen to wiggle our way up above that 71.7 area, only to see it collapse right back down come tomorrow morning, right? If you want real-time trade calls on the Russell, come out and see me tomorrow in our live trade room. We'll walk you guys right through it. Let's keep moving. Next up here, we move from that mighty mini Russell to that funny yellow metal they call gold futures. Gold is reacting bullishly right now to fears surrounding the price of oil. And of course, that incredible, just they yanked the floor out from underneath the Forex traders last week on the Swissy. That's been sending ripples throughout the entire financial industry right now. I got to say, this is one of the many reasons why I do not trade Forex. I do not recommend my clients trade Forex. I just don't know why. In my opinion, basing your career around Forex on a day trading Remember, Forex was never meant to be day traded. What was it meant for? It was meant for hedging purposes for big central banks. So all the little day traders out there trying to scalp Forex, the broker's the one making all the money off you guys, right? Only real good thing about Forex is that you can trade real small, little micro lots. But I've been saying this for a decade. Every year or two, we see these things that, well, you saw what happened in the Swissy, right? Out of the blue, just bam, right? And all of a sudden, everyone's all blown out of their accounts in FXCM. It's really a sad situation, but let that be a great example of just another reason why trade a market that is actually on an exchange. Trade futures, trade stocks, trade something that is fully regulated, trade something that is actually a real exchange where there's a buyer for every seller, right? Our phone's been ringing off the hook here. My stops didn't hold. My stops didn't hold. You're forgetting. Your stop is your broker, right? If you're trading Forex, that's who's holding your stop, not some other trader, right? There's nobody pairing you up with someone on the opposite side of that trade, right? Your broker is holding your future, right? So careful out there, and obviously my thoughts go out to anybody who is adversely affected by that issue here with the Swissy. But that's what's happening with gold right now. Gold is responding bullishly because of fear, kind of twofold right now. Everyone's a little bit dancing on eggshells right now because of this unknown of how the impact of lower crude oil prices are going to impact us. But recently, though, that move in the Swissy really is what's causing things. You could also blame it on China. We just saw a recent 24-year GDP lows for China. 24-year lows for GDP, right? That growth powerhouse in China is no more. It's going to be a very interesting year of 2015. I'll tell you that much. So we are in overbought territory right now here on the gold. And you can see here by looking at this chart, I've kind of outlined where I'm getting this information from. We go A up to B. We pull back here to C. We pull back here to C, and you'll notice I've drawn this out. And I call this an overbought or irrational price action resistance level. Okay? Basically, it's a big, long extension that tells me that if we keep going here, we now are completely irrational. The bottom line is we're due for a correction. Now, notice I said we're due for a correction. There is no guarantee that happens right now, tomorrow, or this week. But just be aware, though, as we stand right now, you've got to be very, very careful here on gold because we've gone so far above that 1,200 big round number here. We are destined for a correction. When that happens, I couldn't be the one to tell you. Maybe it's tomorrow, maybe it's tonight. We'll have to wait and see what happens. So I don't know when the correction will come. So a wise trader is going to err on the side of caution. I'm not going to be buying these highs. I'm going to wait for price to come back to my support levels so I can buy these levels below. I've got 76.2, 71.9. I've got 64.2, 60 even, 61.1, 52.5. I've got 40.4. So these are going to be the areas where we are really going to be keeping our eyes peeled here, looking for that pullback, waiting for the reaction, and we can keep buying, right? So most important thing right now is be patient here on gold. I know we're in a very strong uptrend right now, but the smartest traders on the planet know you can buy the highs. You're not going to get lucky every time. So be careful right now in this well overbought territory here we have on gold. And just wait for price to pull back and look for a buying opportunity at any of these levels that we have posted below. So what I'll do is I'll wait for price to pull back, wait for the reversal pattern and buy it. If I miss the reversal pattern, wave pattern, continuation pattern, right, all the way up. And we'll keep on moving. Key right now, though, is do not be that poor sucker buying at that high right now. Now, looking at the 16 anchor chart here on gold, we get a lot more important clues here. And the big clue that I see on this chart is all the way down at the bottom, the volume indicator. You can see here, we measure that volume. Now, I don't use volume the same way you see most people using volume on YouTube these days. There's a lot of yahoos out there that are over complicating the use of volume just so they can sell these complicated volume tools. Guys, volume is very simple. It confirms the move. Only people that use those complicated volume analysis tools, well, the ones that are selling those complicated volume tools, right? So be very weary of what you see on YouTube these days regarding the excessive use, complicated use of volume, right? People have way too much free time on their hands right now. They're trying to make up all these different ways to use volume. We know how to use volume. Volume always confirms that move. So we see a new higher high there in price. With that new higher high in price, volume also confirms. So we definitely know we're bullish right now. There is no doubt about that. Okay, so we're bullish. Volume confirms. One thing we know for sure, though, is we don't want to keep buying at these highs. So we're going to continue here to look to buy the low of this trading range, 1285.8, buy the 1284.7, buy the 77.5, buying the 76.2. Right? So as we wait here, I want to see the ability here to buy on the pullback. I want to buy at these zones that I have listed below. Targets overhead, 1300 looks to be a pretty good target there. 1299.7, 1307.3. There's some nice easy targets waiting for you there on the gold. So most important thing we see right now is, if we didn't know so already, we definitely know now. That volume is confirming we are bullish here on the gold. And just like I said earlier, don't get caught with your hands in the cookie jar here trying to buy these highs. Buy at the lows. Buy at the support levels below me. All right, and then take your profit at the levels listed above. 96.9, 99.7, 1307.3. All right, looking good there on the gold. Moving forward from the gold 16 anchor to my gold price action chart. Gold price action is, yep, shocker here, still very bullish. And we're trading inside of this massive bull channel you can see. This is a very, very broad, little wide bull channel there. Now we know that whenever we find a bull channel, we want to buy at the lows of the channel. We also can see here, here's that trading range. We got two real obvious trading ranges here. We get flat moving averages here. So clearly here, one more option is going to be if we do break out with a pullback, right? That would be really the only option for us if we don't go lower here before we go higher. So option number one right now, and again, we're bullish, so there's no question about that. Option number one is we go higher overnight. We wait for price to pull back, right? We look for that proper reversal candlestick, and we take this sucker up to that 1307.3 area for that target overhead, right? A little measured move target there, as you can see. Okay, so option number one, if price goes higher, is a breakout pullback. If you're a member of mine, make sure you know how to qualify that breakout pullback pattern with the correct entry trigger. If we go sideways here, just be careful. Stay patient. If we go lower here overnight, I'm looking for a buy off of the 1285.9, right? So I'll buy at support. I'll buy at the high of that previous range. I'll buy at support. So I could easily see us here bouncing off that 82.5, that prior trading range. I could easily see us going lower, again, because we are so quote-unquote overbought on that slower anchor chart. Not much of a fan of the term overbought, but we've been moving consistently higher here over the past 2 weeks, so we definitely will expect to see a correction here. Okay, now if you're a student of mine, don't forget we got that bull channel here on gold. If we do break the lows of that bull channel, again, I could easily see this right now, breaking those channel lows, holding that 82.5, and then running right back up here. So keep your eyes peeled for buying opportunities here on this gold until something changes at these levels of support. Looking good on the gold. 2 out of 3 out of the way here. wrapping up now on crude oil futures. My 32 anchor chart here. Remember, we did roll forward on crude oil to the March 2015 contract. We did roll over on that. Was it last Thursday, last Friday, right? Did that roll over on crude oil? Remember, every month crude rolls over, and it's usually between the 16th and the 18th of the month. So it's pretty much like clockwork, and we're always very quick to make sure everyone's aware of that in our live trade room. You're never going to miss a beat with me when you're in the trade room. Now, what's going on this chart? Well, first of all, we're really kind of range bound right now on crude. It's difficult to say we're completely range bound, but you can kind of see here we are definitely seeing some higher lows, some lower highs, right? So a bit of a what I would call a triangle in here. And then we just recently, you can see, broke out. So that's going to be a great opportunity now here for a sell, right? A little triangle breakout. Triangles are really, really fun to trade. You got to pay close attention to them because they'll sneak right up on you. Break the downside. Look for a retest of one of those trend lines off that triangle for your short, right? So what's my trend right now? Well, we got some, I would say, lower lows. We've got lower highs. Given we're still trying to get below that 44.81 from earlier last week, I'm going to call this bearish right now. It's definitely not bullish. We can see that loud and clear. So I know I want to be a bear. I want to be a seller. Where can I sell? Where do you think is going to be the best option for me right now to be a seller? At resistance. So I'll sell the 47.57. I'll sell the 48.70, the 49 even, the 49.29. I'll sell 50.58, 51.12, and dare I say, if we get all the way back up there, 51.67, I'll gladly sell the highs of that range as well. Now, markets move in three ways: up, down, sideways. So let's think about this for a second on crude oil. What are my options if we move higher? If we move higher, use that overhead trend line. If we move higher, use that trigger zone. If we move higher, use that range high, 49.29. If we move higher, look for a reversal pattern now so I can trigger an entry to get short and follow this trend. What if we go sideways? If we just rattle around sideways here, what am I going to do? Sell those highs, right? Sell the high. If we trade sideways, sell the high of that range. As of right now, I'm right around that 47.57 resistance level overhead. Then what if we go lower, right? What if we don't go higher, we don't go sideways, we just take off the downside? Well, if we take off the downside, I'm now going to be looking for wave patterns. Every new lower low, trying to get that price to get into my trigger zones, right? My crosshair, I'll sell retracements on the way down. The one thing, though, that I want to be careful is selling into these support levels. That's the only thing that I worry about if we just make a run for the lows here right now. So if we do push lower, just be aware, this is going to be a little bit of a hairy area here, 46.18 to 45.48, right? Be a little bit easier money if we get this price to go up here tonight and then give us a chance to swat that thing right back down tomorrow morning in our live trade room at 8 o'clock in the morning. All right, so definitely bearish on crude, looking to sell for the best trades here. I'm going to sell these overhead resistance areas, and then I've got targets waiting for me below. Really three basic targets here: 44.81, 44.01, and 42.57, right? There's your crude 32 anchor. Let's now cut that number in half. Now this chart looks great, right? Here's a really good looking chart here. This one really makes it difficult not to be excited about selling here at these highs. What do we see here right now? I can see we're definitely in a downtrend, right? As of the last chart, didn't really have that much confidence in that downtrend, but this is clearly a downtrend, right? Lower lows, lower highs, right? And we haven't seen a higher high here in over a week right now. So definitely looking for selling opportunities right now. And where would we want to be a seller? Well, first of all, we can see we have that bearish channel. this is one of those channels where you can see we really don't have a lot of strength that downside, right? This bear channel really would have been better drawn like that, right? But it doesn't fit very well. So the lows of that channel, a little bit weak, a little bit shaky on that low, but at the very worst case scenario, it is a very nice down bearish trend line overhead. And so we'll definitely use that trend line overhead as our guide. Okay, so crude oil moving lower. We want to sell. Where do we sell? At resistance, at the high of this bear channel, at the resistance levels above. Right? Let's play that game. What if price goes higher? What if it goes lower? What if it goes sideways? If price goes higher, I'm looking to sell at any of these red resistance areas overhead. So you can see you got plenty of opportunities here for selling. Remember, I'm not going to blindly just sell those highs. I am going to wait for the price to test those resistance levels, look for a reversal pattern, look for a continuation pattern after a successful reversal, right? So if price goes higher, we're looking good here to be selling short at the levels listed above. What if price goes sideways? If price goes sideways overnight, we're going to mark up the highs, mark up the lows, and we're going to sell the highs using a breakout trap. You could also sell with a breakout fade if it was to go higher and then jump up. You could sell that as a fade. Last but not least, what if price goes lower? If price goes lower, this once again is where we have to be careful. I don't want to sell into that 46.09. If you kind of dot the I and cross the T here, you can see there's a measured move target. And then you got an extension target there at 45.65. So this area right here, this 46.09 to 45.65, this area here should be a well-defended support area just because of the measured move. And then, of course, you've got the low, right, of that channel, right? So the only thing I'm worried about right now, if we go lower, I will jump on that horse and I will keep on selling retracements, wave patterns to the short side. Just like I always tell you guys in the trade room, it's great that we're looking to sell when we're bearish and we're going to sell at resistance, but just be careful you're not selling directly into a major support level. That's going to be just, that'll be the worst possible way to do this. Last but not least here, wrapping up here for our newsletter here for Tuesday evening, crude oil price action. Now this is an interesting chart. As you can see, we got plenty of resistance levels above. I zoomed all the way out here to find those targets below. So if you're wondering where I got those targets, I went back in time here and just projected out those swing levels. That's where I got those green lines below me, right? Those will be excellent for targets here. And then we can easily see what direction we're going in, right? Here we have that bearish channel, no doubt about that. Definitely bearish on crude. With that bearish channel, you'll notice here we did get a successful break of that channel and went all the way back down to retest that low. So we are very, very bearish right now after breaking that bear channel and retesting the lows of that range, which now tells me that we're probably going to continue to go lower here. I can't exactly project how far we go to the downside because we don't have enough information just yet. But I do know one thing is for sure. I'm looking for selling opportunities here now at the resistance levels that I have listed overhead. So we got 47.09, 47.58, 48.15, and 48.77. Those are going to be my important resistance areas overhead. And, really, I could have shaded this area in right here. This really could be a kind of a resistance zone up there between 47.58 and 47.69. All right, guys? So again, I would expect these buyers to push this higher just a little bit here. Well, who knows? It's crude we're talking about, right? This thing's got a mind of its own. So we know that I would expect price to go higher before it goes lower here, but stay focused on that sell side here come Wednesday morning. Now, speaking of Wednesday, tomorrow is inventory day, so make sure you come out and join us tomorrow morning in our live trade room. Before we wrap up and send you guys on your way here today, I want to remind you guys to grab a copy of your free pass. join our nightly newsletter mailing list, download all of our charts that we've gone over with you guys today. And if you happen to stumble over here to SchoolOfTrade.com, don't forget to join our free trial. We have the best free trial on the planet. I know for a fact because I just spent 6 weeks of my life making darn certain that we have the absolute best free trial on the planet. You're going to learn more with me in part of our 7 days to trading success series. When you join the trial, I'm going to send you guys a video series called 7 Days to Success. You're going to learn more in 7 days with me for free than you're going to learn anywhere else on the planet after paying thousands of dollars for. I wouldn't take my word for it, right? Don't take my word for it. Let me prove it to you. Register for our free trial right on our homepage. While you're here, don't forget to learn more about our 3 levels of membership. And if you want to know more about our lifetime memberships, if you want to know more about our chat room and our trade room, don't forget you can always use our live support team standing by 24/7, 365 to help you guys every step of the way. All right, guys? Hope everyone out there had a great MLK weekend. Boy, I'll tell you, it's only a few more weeks until daylight savings time again. I know. We'll be turning those clocks backwards, right? Finally getting that sunshine later in the day here again. So we're getting into this year 2015, starting to see a change in the weather here in Los Angeles. Very springtime weather here right now. And I hope you guys had a great weekend, right? Have you picked your team for the Super Bowl yet? I know who I'm rooting for. I'm a Patriots guy myself, but boy, I'll tell you, incredible weekend we had. What a great weekend. Hope you guys had a great weekend. Hope you've got your bets placed for the Super Bowl here in a few weeks. Be well, and don't forget to come out and see me tomorrow morning live in real time, 8 a.m. Eastern time. We open up our trade room, and we'll walk you through everything we're doing in real time. Guys, you don't need to do this on your own. Look forward to seeing you tomorrow morning. My name is Joseph. Adios, amigos. Bye-bye for now.